Welcome back to today's more report on Friday the 5th of February with me, Rich Pro Market Analyst at Antec Markets. Let's look at dollar yen, and this is the big chart that's been moving in the last few days. And look at that massive sell-off, all the way back to the bottom where it was forming that low, those lows around 1650. 1646 was the August low. And subsequently, we saw sort of lows around that level, didn't we, in January? Sort of, on four separate occasions, we saw kilos forming around that level. We saw a minor spike below that to 1596, but obviously quickly recovered. But certainly that support around 1650 seems to be in place because, once again, yesterday the low 1650. Now we do have the prospect of continued worsening momentum, and it would suggest that any rallies are still going to be seen as a chance to sell, because the just ferocity of the selling pressure that came through in the last few days would just show you, I think, that the market is arguably intent on testing this key support around. I've got to come out because of this annoying line, but key support around 1550, which would mark a massive top pattern around 1550. So I think if we break 1650, I think we could well be on the way towards doing that. Certainly close below that. Yesterday, the closing low of 1675 was the lowest since January last year. So it is suggesting that the markets are beginning to test this level. Now we've seen a consolidation overnight, and that consolidation is already finding resistance around 17 figure. You could see that that continues to remain in place, but we've got the payrolls report, so you do tend to get consolidation anyway. But I'd say that the basis of resistance around 18 figure is probably more significant, being sort of a bit of a pivot level. And yesterday's reaction high at 1825. So I think that that's probably the level you'd be looking out for. Sell signals around that sort of 1750 to 18 figure area, and if you get a rally above 1825, then that would sort of turn the outlook around again. But look at this 21-hour moving average, the green line here, basis of resistance, currently at 1682. So it is interesting that we're getting a slight bit of consolidation, but that consolidation, as I said, is around about because of the payrolls report. Hourly RSI throughout this decline has also continued to turn over around the sort of mid-40s, 50 area. So these are all signals that you can use as your sort of suggestions that you're going to get the start of a new trend lower. But certainly I think any sort of rally towards 1750, 18 figure on a potentially a stronger payrolls report could, I think, be a chance to sell. So that's the way I'd be looking at playing it. But I wish you good luck in your trading on payrolls today, and I'll speak to you later. Thank you.